Hey everybody, Colin Plume, CEO, Noble Gold Investments, and got Jake Bell here, one of our senior sales associates from Noble Gold. Excited to talk about and break down this big, beautiful bill. How are you doing, Jake?
Pretty good. Pretty good. Thanks for having me on, Colin.
Yeah,
Yes, exciting
absolutely.
day.
Yeah. Well, I mean, I think any day you have a tax cut is a good day. So, you want to go through? You got something to say off the top, or do you want to? Should we go through a few of these things? I'd like to get specific here. Uh,
Well, we can start at a bunch of different areas. I mean, yeah, we have a big tax cut. That's cool. That's great. How many times does that happen? Not a lot.
Not a lot.
There's some negative in that, and that's really where I want to go. And so I guess I'll start off with the biggest thing that I've been talking about over the last couple of years, Colin, has been our debt,
Mhm.
issues around our dollar and our debt. Well, how do we get out of debt? The government needs to tax. It's tax and issuing its own debt that's funding everything that it does. Well, if there's a tax cut, which hooray for us, but how is that going to help settle our debt?
Mhm.
That's a growing gap.
Yeah.
And so, how that gap is going to be filled is the most intriguing question about all of this. And that's what I'm looking forward to getting into.
Yeah, absolutely. Well, let's go through a few things. So we got a big business corporation tax cut, permanent tax cut from 35% to 21%. So, big businesses are loving that. They're happy. Small businesses, self-employed, they didn't get a new rate, but they got a temporary tax break at the 20%, the pass-through deduction, that which was already there. I guess they just extended that. That was something
Mhm.
that we've
Set to
had.
expire. Yeah.
Yeah, we've had that for a while. It extends the permanent individual tax rates at 10, 12, 22, 24, 32, 35, and 37%. So that's good. And then, the salt tax was a big one, I think, for a lot of people, that it went from 10,000. So you could deduct before the bill. One of the negotiations when the last time President Trump was in office is that they reduced the amount you could write off on your tax to $10,000 from your home mortgage, and now it's at 40,000. So if you make less than $500,000 a year, you can write off 40,000 on your home mortgage, which I think is going to be great.
Power
Uh,
to the individual. Yeah.
Power of the people, and with you know people that are. I think part of the idea of doing that was with rates being higher. Um, I think when rates are at 3%, it's pretty much free money. It's just like they're just giving it to you. But at 6, 7, 7.25%, the government felt, President Trump felt that giving a little bit back, a little bit of a cut on what you're paying, a little tax relief, was a good idea, which is great.
It's
Um,
nice. It's nice to get it anywhere we can, right?
yeah,
Because when it comes to government, it's a one-way street,
yeah,
right?
exactly. Well, it seems
There's
like the street's coming back our way a little bit, which is nice. Also, that even though from 10 to 40,000 doesn't feel like a lot, if it sticks at that rate, then that would be for a long time. Most people have a mortgage, 30-year mortgage, right? So I mean that could be around for 30 years for a lot of people they're going to take 30 years to pay their mortgage. So I think that's a nice thing. Um,
and it's a bottom-up policy, right? It's affecting the individual first in hopes that that will stimulate and grow the rest of the economy, which again is a welcome change. And that's kind of the unique thing about this bill. It's a new strategy in general. This isn't something we've seen, and it's going to require a couple things to really work out in order for us to not fall flat on our face.
right.
Um, I, I'll mention a couple things are kind of on the outskirts of this conversation, then I'll dive back in. BRICS nations back in the news, gaining momentum, adding countries. They have 40% of the world's GDP in that system. Trump, in response, announced today during a press briefing that there's going to be a 10% tariff tax to any country who's simply in the BRIC system.
Mm.
So obviously that's an ongoing dynamic. Tariffs have been given a hard deadline. For now, August 1st, they go into effect. How are these going to play out? How are markets pricing this in? With the big, especially with the big corporation tax cut, I would have expected to see some sort of upward movement in the stock market reacting to it. And that didn't happen today. And I think that has to do with the tariffs kind of pushing that down.
Yeah, there's definitely concern out there with the tariffs. Yeah, and that makes sense. That not knowing where the cost of your goods are going to be and not having any kind of consistency. Unfortunately, we're sort of negotiating in real time, right? Like things are changing. He's making deals as they come in, and as corporations are trying to plan, it makes it very difficult for them to plan their future.
Again, this is all brand new, right? We don't know what this is going to look like, and that's volatility to a T.
Yeah,
which is of course why we're all here. And so the other thing before I get back to the tariffs is central bank buying. The appetite for our treasuries, U.S. treasuries, continues to dwindle. Right. The appetite for precious metals continues to go up.
Right.
Record amount of tonnage. If you knew nothing else about the global markets and you just knew central banks, the biggest buyers, the biggest financial powerhouses, what are they doing? They're increasing their position in gold and silver.
Mm-hmm. Absolutely.
That tells a huge story on its own. Again, for years, they have been acting as if there's a financial crisis.
Mm-hmm.
You do not continually add to your gold surplus unless you expect something negative to occur, or if you just simply expect gold to outperform other assets, which probably little column A, little column B. But there are two things. Going back to what's happening in this big, beautiful bill, we have lowered taxes, so there's less income for the government. We have increased our debt and our spending, which something doesn't add up there. And so in my take, I see two things that fundamentally have to thrive with this bill. And the first is the tariffs. We need these tariffs to bring in and sustain that income that the government is now. I mean, this was what he ran on. We'll see if it works. It's got some extra features that, weren't mentioned on the campaign trail, and fair enough. I mean, these are complex things, but the tariffs have to work. They must do what he expects them to do, or else we are going to fall flat on our face.
Yep.
The second thing that has to happen in tandem, it cannot be one or the other, is growth. We have to stimulate enough growth in this country to fill that gap, because I'll get to the debt ceiling being raised a little bit later, but we have this issue with our debt. It is drowning us. What is it right now? 125% of our GDP?
Correct.
So, and by all metrics, it's set to eclipse 140% by the end of this decade. There is a unsustainable path moving forward here. This doesn't add up. This doesn't end well. Something has to break. And the two things that have to come to fruition, again, those tariffs have to work, and we have to grow. We have to have record growth. We have to have tremendous growth.
Right. Yeah, no, absolutely. Yeah. And I'm just going to mention there's a few, every bill has a few, things that are kind of
eyebrow raising.
A key campaign trail sort of idea, like the no tax on tips, I think was like something to help get some momentum going. So you get temporary deductions on tip wages up to $25,000. You get deduction on overtime up to $12,500, which that's good because that would affect more people, I think. Mm-hmm. Obviously, the wages will help too, but having it be overtime pay, I think everybody hates it when they have overtime pay and then they get taxed, pretty heavily there.
Yeah. The motivation factor. I think.
Yeah, it's like why am I going to work overtime if you're just going to take a significant amount of the money?
If I'm breaking even, I'd rather go hang out with my family if I'm just going to tread water by spending, instead of working 8 hours, 10 or 12 hours. I mean, people who want to grind, people who want to put in the extra effort, they should be rewarded for that.
Well, and the
should,
other thing too, I would say on the tax on tips, the thing that I think about is it allows people that are actually getting taxes taken out to get a little bit of an advantage, as opposed to a lot of people are not, just collecting cash. So it's sort of for people that are doing the right thing and acknowledging they're paying tax. They get a little bit of a benefit. I think it encourages people to not just get all their money paid under the table.
another very unique secondary feature of this bill. It's rewarding people for doing the things that they should to be a part of our society.
Right. Exactly. Yeah.
And in those elements, that's beautiful. I mean,
Yeah.
That's the beauty in the big, beautiful bill, right?
Yeah. There's, and it's subtle, right? Child tax credit from $2,000 to $2,200 per child. So that obviously is helpful. So, I think, and the reason I mentioned some of these too, is just maybe people are listening. You should keep these in mind next year when you're doing your taxes. Like you should, if you work at a bar, or you're a waiter or waitress, like you should be applying for these tax advantage, making sure that your taxes include these things. These could be pretty significant if you have children. I mean, a lot of these tax reductions or write-offs affect pretty much everybody at this point. So I think there's some good, and then there's also a deduction on auto loans. So it's interesting that the SALT tax going, the housing mortgage going from 10,000 to 40,000, and then the auto loans are two areas that have really struggled in our economy. Auto loans are really struggling. Defaults are way up. So having this deduction, again, people that are paying that have not defaulted on their auto loan, they get a deduction. So I think it encourages, as you said, it encourages people to do the right thing, be smart, continue to pay. And so those are things that I'm excited about. And then there's tax deductions for seniors that earn less than 75,000, which is a huge number. I would say that's probably the majority of seniors typically are making less than 75,000. And so that they're going to get a write-off too. So pretty much across the board, industries that are struggling get a write-off. People that are, in a demographic where, seniors are typically earning less, like maybe they're making 20 or 30,000 a year, 15,000, maybe they're working part-time. These are all industries that need it. Yeah. And Fairlane pulled up the auto loan delinquencies are at an all-time high. So, encouraging people to start paying again, start paying off their loan because they're going to get a deduction. These are all ways to get people back to doing the right things. And hopefully we don't default on a lot of the debt that we have out there. So I think there's some good things in there that help people day to day. But as you said, it's so much of it is it has to drive the economy. It has to get people starting businesses. Businesses need to grow. They need to, the economy needs to grow. All these things have to happen because, we're already in a massive hole and we're going in a bigger hole. And, they're saying the tax foundation estimates the total revenue loss from tax provisions at $4 trillion. So, these are pretty significant.
Yeah.
But yeah, and then, I think the one thing I saw the border, spending on border, the defense spending that's allocated in this. And the only thing, that I would like to, it says there's $25 billion for the Golden Dome, the missile system, which, it's probably going to cost more. It never costs what they say it's going to cost.
That's a good point.
But the part in here that I'm a little like, I don't know, is $15 billion for nuclear deterrence. Isn't having the most nuclear weapons the biggest nuclear deterrence that there is, or do we? I don't know. I
think a lot of people are seeing, and there's been a lot of high profile criticism, obviously, not just from people who don't like Trump, but his traditional supporters. And it's one of those line items where you look at it and you're just like, geez, that's a
big number.
That's a big number, and it just doesn't add up. Now, maybe it doesn't add up to you and I, and maybe there's something bigger and grander that's working.
Sure.
Who knows? But yeah, it's a spending bill.
Yeah,
is what it is.
Yeah,
and that's not what we expected. But well, if you look back at Trump's first term, he spent a lot, and
He
gold
did.
did surge 50% during his first term. And I think
Right.
with the groundwork that's been laid underneath leading up to this, and now with the spending bill in place, that also sets the stage for the next several legs of this precious metal market, which we're very excited about.
Yeah, so let's talk about the debt ceiling increase, which I know you wanted to
Mhm.
talk about. They just immediately increased the ceiling,
5 trillion.
5 trillion. Um, my opinion, to get the bill passed, pretty smart move if you could get it thrown in there. I'm sure some of the conservative hawks were disappointed to
Yeah.
see this in the bill because it just kind of gives them a blank check
And
to sort of open things up and just continue to spend. What are your thoughts on just increasing it that massive amount? Right out of the gate.
So I think that's probably the number one reason why guys like Thomas Massey and Elon Musk had issues with this bill. I mean, that is just a massive increase, and by the tone of things. Now, obviously, this was never stated explicitly, but there was a feel leading up into this bill that was predicated around what Doge was doing and reducing government size.
Right.
Adding 5 trillion to the debt ceiling is not in that tone. That is not in that
Right.
same breath. And so this is one of those things where, okay, you're going to do this. This is something you're going to, either fly or fall for. That's going back. It was that specific thing where if we're just going to keep growing our debt, how do we get out of it? How is
Sure.
that gap going to be filled? Especially when the reduction in taxes are going to lose, you could debate $3-4 trillion of income.
Right. Right.
So again, that gap is growing. And how do you protect yourself? Well, banks do it with gold and silver. We do it as well. Maybe some of our listeners should consider that.
Well, and
Um,
and how is the dollar going to be affected by all of this? Like, what's the effect, Jake? What do you think the dollar is going to react to? I mean, we already our credit got downgraded by Moody's, right? That happened about a month and a half ago. So they're saying we're spending wildly, we're out of control. They reduced our rating. Now we have this massive spending bill that takes place. If we don't see massive GDP growth this year, if we see some banks go out of business and the dollar continue to lose value, what signal are we sending to the world about us as a country and our dollar and our currency? What do you think that message we're sending?
Nothing good. There is no reality moving forward where the dollar strengthens. Now let me put that in perspective, because when you hear dollar weakness and strength, you're hearing it in relation to other failing fiat systems.
Right, exactly.
It is not a standalone statement. It is comparison to other systems that are in the same boat. And when I use the term strength, I'm talking about purchasing power. What is your dollar going to do for you in the next 5 and 10 years? A fraction of what it does today. And today is a fraction of what it did just 4 years ago.
Right.
And that's the nature of a fiat system, fair enough, but it's happening at such a pace. There's a concept I try to communicate to a lot of our clients, which is you cannot hold dollars and think of that as a storage of wealth.
Mm-hmm.
It is so much more accurate to view that as a line of credit. And that line of credit is dwindling. It is being eroded by no fault of your own. And that's what this bill is going to do.
It's like a loan, right? Cash in the bank is like a loan, because even if you're making the 3.5% or whatever, if inflation's 7, 8, 9%, there's still a negative arbitrage by keeping the money in the bank, right? And so
your wealth.
And it is a loan, really, because you're just giving them the money to go out and make way more money, right? That's how banks, people always, it's funny. I was talking to my 8-year-old son and we were just talking about banks and stuff. We were driving up near our house. There's like 15 banks within 5 miles of my house. And he's like, why is there so many banks? Like, how do they, and I was explaining that the banks get our money and then they go out and, make a better return. They loan it. They do all this stuff. And he's like, so they just take your money that you worked hard for, and they do all these things. And he's like, Dad, we should start a bank. So Max, that's what my oldest son said.
Max is a sharp kid.
I like this kid. Yeah.
Yeah.
And so, I think these are the things that people don't realize is that the 3% for whatever amount the bank's giving you, they're making 5 to 7 times that percentage. And if you're not making somewhere in that range, then you're in trouble, right? I mean, they're holding you hostage. So I agree with you. Having the money in the bank is really just a loan. It's a negative loan.
And we're all in this position where you have to have money in the bank.
Sure.
Right? Like that's our day-to-day living expenses.
Yeah.
But if you have a set of dollars that are just sitting in the bank and you're not going to touch it for 18 months, 24 months or longer, you're losing your wealth.
Yeah.
Your wealth is just evaporating out from underneath you.
Yeah. What are these questions, Fairlane? Let's pop up some of these questions. I know you have some questions here so why did Trump want this bill? Ooh, good question, Jake. Why do you think Trump wanted this bill?
Well, that's a complicated answer. I mean, lots of things, right? Campaign promises, moving away from a system that I think we all saw was faulty, and it might work. It might work. I really hope it does work.
Yeah.
I'm looking at the landscape, and this has never been done before. And again, these are unique strategies which do seem to be bottom up, which again does fit the tone of what he ran on.
Yeah. Well, also the corporate tax was going to expire this year. So he had to, and so, corporate tax before he got in office the first time, I want to say it was 28 or 30%. He brought it down to 20%. If he didn't enact this bill this year, it would have gone back to 28 or 30%. So I think just on that line item, his theory is that it worked the first time. I'm going to keep it in place. I don't want to rock the boat at the end of this year. And I want to keep that corporate tax low. And in theory, the corporate tax is low, and then businesses go out and they hire more people, and they make more money and they circulate. So, I think that was to answer the person's question. I think that's part of the strategy. And obviously the idea was, you're right, corporate, he campaigned on the tax, the not taxing tips, which I think is a very small one. I think the thing that was concerning for me is always in my opinion, a president that's been less willing to get into war, less willing to kind of push an escalation, that there was so much defense spending in there.
Peace through strength, right? That's what he would respond to that with, and fair enough. How will we recover the loss because of the tax cut? Well, Casey, good question. We kind of alluded to it earlier, and we have to grow. Our economy has to grow staggeringly, and the tariffs have to work.
Yeah.
Another thing to touch on is we just instituted tariffs with Japan. Well, Japan is like is the U.S. Treasury's best friend, right? They are the number one buyer of U.S. Treasuries, and they've been on our side for a lot of things. And I mean, is he keeping his promise? Is it an American first policy? Yes. I hope it doesn't rub Japan the wrong way. I hope it doesn't cause any fissures.
Right.
We need friends. We need allies. And when you have make no mistake, the entire world economy is being restructured. Everything is being reworked right now. And that is a scary and volatile thing. You don't know what's going to happen. Will this plan work? I really hope so. I really hope so. But there's a best case and worst case scenario, and all roads point to gold going up.
Yeah.
That's the beautiful thing about where we're positioned and what you've done with this company, Colin. Gold is what's going to protect not just countries, but individuals.
Yeah, absolutely. Absolutely. Yeah. It's, and we've seen a little bit of a pause in the tremendous increases in gold. I always say gold is like a stair step. Typically, it just goes up and then kind of flattens out and then goes up, kind of finds a new floor. So we've seen it sort of flatten out here. my theory has always been that we are going to do more stimulus because I think they're going to lower interest rates this year. They're going to push heavy next year to push to get money cheaper, just so we don't have a complete real estate collapse. And, when I say money cheaper, do I think interest rates are getting back to 3%? No. But do I think that home mortgages are going to be in the fives first quarter next year? Absolutely, which will be a massive boom. I think that'll kind of level the playing field. Jerome Powell should have lowered rates at the last meeting, but he's in a pissing match with Trump, and so I think that these things, lowering rates, making the dollar cheaper, helps us sell goods overseas. Right, number one, it does give us a little bit of a leeway just in terms of where we're standing in terms of the dollar gets weaker, but we become a better global partner. If there's tariffs, it's kind of a trade-off. But I think that my theory is that we're going to go through a super cycle in precious metals, similar to what happened in 2008, and that maybe we see a little bit of pullback in gold and silver initially, but I think long term you're going to see metals start to take off. I think they're going to do quantitative easing, and if anybody looks at the charts, if you go back from end of 2008, 2009 to 2011. Gold and silver absolutely skyrocketed under quantitative easing. And so that's what I predict will happen. And it's because Powell's going to be forced to lower rates this year. He's going to have to. Inflation is slowing down. Despite what he says about the tariffs, true inflation is going down. And I think that we're going to see, a massive buying spree in metals, because ultimately what it comes down to is, what are central banks looking to buy? They're moving away from U.S. Treasury bonds, and they're getting into other assets, and gold and silver make a lot of sense for them to put gold in their portfolios. So I think it's going to be a very exciting time, and I think we're going to have some shortages in the silver market. I think before the end of this year, early next year, silver is just poised to really take off. I think it breaks through $40 an ounce. But it's going to be pretty exciting. And for people that don't know or don't understand, if you're just completely in the stock market and you have just one thing, and we saw this happen in 2022, you were really affected by a downturn in the stock market. And I don't know where the stock market's going to go. We're pretty close to an all-time high. So can we continue to go up? I don't know. But most of the multiples, most of the stock evaluations, most of the prices are 3, 4, 5, 10, 20 times more than what the underlying value of that stock is.
Yeah.
So I believe that physical investments were going to do great. So I think that real estate will do great first quarter next year. And I think anything that has a true limited supply will do very well. And precious gold and silver actually have a limited supply. It's a limited supply asset.
And what you referred to, the PE ratios across the board in the stock market are pretty much at all-time highs.
Yeah.
And for those who don't know, it's just a valuation metric. The lower the PE ratio, the better valuated a certain company is. You don't want to see it extended. Some companies by nature have higher PE ratios when you get into the techs and the AIs and things that maybe haven't generated any sort of income yet, fair enough. But most of the growth that we've seen in the stock market has been very condensed into that Magnificent Seven.
Correct.
And I mean, that sets up a 2000 .com bubble. And so beware and be diversified and have uncorrelated assets and tangible assets. That's how you're going to protect yourself.
And own them yourself, right? I mean, I think that's the name of the game. Own them yourself. That's what we do. We're not beholden. When I own gold and silver in my portfolio, it's mine. Let's cut to something real quick, and then we'll wrap up here, Jake, on some topics here.
Prices keep climbing. Groceries, gas, everything.
I know, even with a new administration, fixing policies, keeping the economy in line will take time.
I'm so glad we signed up for Noble Gold Investments Value Lock program.
We tied our savings to gold. It's an asset that keeps pace with inflation. When prices go up, so does gold.
So when we need our cash, the value's still there.
Secure your savings with Noble Gold's Value Lock. Call 877-646-5347 or visit noblegoldinvestments.com.
Yeah, so let's talk about this Invest in America Act that was brought by Ted Cruz. I first heard about this from Charlie Kirk a few months ago. And in essence, when someone is born here in the U.S., they will get $1,000 provided by the government in an account that your friends and family can add up to $5,000 a year until you're 18 years old. You can take it out at 18, or you can keep it going, similar to like an IRA or a Roth account. This is a fantastic idea, by the way. I think it's an unbelievable idea. Go ahead, Jay.
I love it. I absolutely love it. It's putting blood in the game for everyone who's a citizen, right? We talk about the stock market a lot, but not a significant percentage of our civilization is actually invested. I think it's below 30%. So you're getting everyone in
exposure. Yeah.
You're getting that exposure. You're getting that growth. It's tied to the S&P 500. There's going to be some sort of small fee associated to it. I don't know what to make of that just yet. I don't know if it's going to act like a Roth. I think it's going to be taxable income when you pull it out.
It's going to be capital gains when you take it out at 18. Yeah.
Okay.
So it'll be like a traditional. I think it'd be great if they allowed you to put gold and silver in there too. I think it'd be good to have some diversification. If you're really thinking about, Ronald Reagan was the one that pushed gold and silver in IRAs. I think that they should include you should have other assets. I think it'd be interesting to have a little bit of both in the account, but a lot of people just buy gold and silver directly and do the same idea. They buy for their grandkids and they'll buy, a few $1,000s a year and sock it away. I did that with my kids. I know you're doing it with your kids. So that's, something that's important too, but I think you do want to have some diversification, but I think it's a great start. Also it gives kids an idea of what money is, that they have this account that's growing. So I love it on so many levels. I hope it passes. It seems like a no-brainer. It's something that we need. It's something that we need to think about strongly. I think it gives everybody a little bit of an edge. Mm-hmm. And in my opinion, they should raise the age. I don't think it should be 18. I think maybe you don't let them touch it until they're 25. And because, the part that's concerning is, an 18-year-old brain is not fully formed, in my opinion. So I think maybe pushing it out a little bit farther. We asked ChatGPT, if you invest $5,000 to fund that will track the S&P for 6 years, how much will you have at 61? 4.1 million at a 7% return. So there you go. So this gets you there. 8% return, 6.2 million. So so this kind of goes along with my thought, is that if we can make it so that they don't touch it, they kind of forget about it, it'll go up even more. And how much better is this than Social Security? Right. Oh. And if you think about it, I mean, if look at this return, $6 million at 60 years old, or you can get, $2,000 a month, $24,000 a year, Social Security, let's say average, this ends up being a much higher return. Also, I think it'll get people to, we even see it with my company. We have a 401k, and, I see so few people contributing more than the 3% that we do, because they're not trained to start thinking that way. And so obviously that's why I put the 3% in for everybody to get them going. But, even if I always say, if you just match my 3%, you get to 6%, like you can look at the growth over years. So I'm excited about this bill, and I hope the Democrats don't blow it.
Most of us are financially illiterate.
Mm-hmm.
And I think there's been a lot of talk that these are things that should be taught in high school. And I agree with that. I mean, these are not complicated concepts. And having some blood in the game right off the bat is going to not just improve the individual, but it's going to patronize. I'm using the wrong word. They're going to become patriots because they want their system to work on their behalf, and they
Absolutely.
are immediately a part of it.
Absolutely.
And so there's a poetry in that is beautiful. And this is just the introduction of it. It could very well, take many different shapes over the next 30 years. And I'm sure gold and silver will be added to it eventually. Maybe even relatively soon, because I think you and I both see the projected gains in gold and silver over the next just short couple of years. And I think it's going to be hard to keep those two asset classes out of something like this, when my expectation, I think silver is going to outperform every asset class in the next couple of years. Gold is extremely well, but I mean, you wrote the book on it. You know that silver is needed and we don't have enough of it. And that is a economic 101 dynamic that we cannot avoid. And so will we see this? Probably. Will it be 5 years, 10 years? Who knows? Maybe even next year. Again, these are brand new and exciting concepts. This whole bill is brand new in so many ways. These are things that have just never been tried before.
Yeah.
How is it going to work? I don't know. I mean, that's the real scary thing. Could there be all sunshine and rainbows on the end of this? Maybe, probably not. But we'll see what's going to happen here. And I don't know. How long do you think it'll be before we have some sort of writing on the wall? How long do you think this big, beautiful bill is going to be enacted before we can have some sort of conclusion to say, hey, this has worked, hey, this has not worked?
I think it's going to take until, second or third quarter next year. You got to give it a year to see, what companies are going to do and how they're going to react. And I also think the tariffs will be more settled at that point. So I think a year from today, we'll have a better idea of, did this tax bill work? Are the tariffs effective? I think we'll be in a much more unique situation where we have a lot more data. We're just guessing at this point. I feel better about this Invest in America Act bill than I do about the tax bill, frankly. Even though I'm someone that is going to massively benefit from this tax bill, I don't know. I hope it's the right thing. I hope we're moving in the right direction. And so, so it'll be interesting. Let's see. Any other questions from the audience or anything else we need to get into here? Thoughts on platinum? Yeah, platinum's already started to take off this year. Another industrial metal. And we were always scratching our heads when platinum was sitting at 950, 940, 930. So now
a couple of years.
Is it in 1250? Where's platinum staying?
Oh, no, I think it's in 14.
Is it in the 14s now?
I'll tell you right now, 1376 as we talk.
Wow. I mean, So it's definitely moved up a lot. So it's up, 28, 30% this year?
Yeah.
I mean, I listen, it's, that's the funny thing about, even though wait a minute, 1389 today. Even though I'm in the business and I watch this stuff every day and I look at it, some of this stuff, like when I buy platinum, I know it's going to go up. I know platinum eventually will be back and be even with gold. I absolutely believe that will happen. That's what it used to be for years and years. So I know that's going to happen. But that's the nice thing about metals is I think the thing that people tell us the most when you read our reviews is that once they get gold and silver in their portfolio, they absolutely feel good about it and they feel better just in terms of their investments. And that would be the one thing I would say is that as much as like there is this FOMO of the price of gold and where it got to and this and that, you still are going to feel good in gold in your portfolio because of the limited amount of gold in the world, because silver is so heavily used. It doesn't matter. And, I buy every quarter. I know a lot of people that buy every quarter. I've been doing that for years and years. And sometimes I'm like, oh God, I bought at the wrong time or this, but then in the end, it ends up working itself out. And I'm happy about it. Cause I bought a lot of silver, in 2021 and it rose all the way to $29. And then we had a little bit of a pullback. Right. And I thought, what is it? But now it's up again. I mean, it's like, it's always correcting itself in a way that makes sense in terms of the demand. And to end on your point about silver, I mean, the market is pretty small, right, relative to gold. So when there is a shortage or when we need more or a use comes out and they start to, like solar panels wasn't around, 8-10 years ago, wasn't a big thing. Now it's a big thing. 7% of the usage is solar panels. Electric vehicles wasn't around, wasn't big. Now so every time there's one of these new massive uses of silver, it creates a shortage. And so we have a 148 million ounce shortage this year. That's just going to continue. So I think it's going to be an interesting time. So anyone that wants to learn, give us a call, talk to Jake. We have a lot of free information. We have a platinum guide. We have a silver guide. We got gold guides. You can move an IRA, old 401k. Call Jake, call Noble Gold, get your questions answered. What else, Jake? You want to end here on anything? You got anything to end with?
I'll just wrap it up. The big question that we have is how big is this big, beautiful bill going to be? And the most conservative estimates put it somewhere around 450 billion. Now, the most extended estimates put it around 4 trillion. And so we don't know how this is going to play out. And normally I would favor on the side of, I think I know I think Trump knows what he's doing. But again, going back to something we mentioned earlier, the fact that they did raise the debt ceiling, that is a terrifying thing for me. And again, it wasn't in the tone, wasn't what we expected to see coming out of this bill. That's what I'm really going to pay attention to are we going to have government control? Are they going to continue to spend recklessly? Because if that does, the dollar's in trouble. Gold and silver is going to do extremely well, better than we already anticipated to. So a lot of things to interpret. I do think it'll be about a year. I love that timing that you gave, and that's going to be right around our 250th birthday as a nation. So again, a lot of poetry underlying this bill. We'll see what happens.
Absolutely. Super exciting. Thanks, Jake, as always. Thanks, everyone, for jumping on. And call us with questions, email us, and we'll see you at the next one. Thanks so much.